righty. All righty. What does that say? First time user. Cool. Official TikTok. Iron. John. Cracky. What's going on? Next trade. John Boyd John. Sif Molly. Good evening. Aram Osik. I don't know. Ron. Gustavo. ¿Qué pasa, amigo? Stretch. How are you? Big Aza. What's going on, Big Aza? Lope John. Good evening. Entrecorda. I can't read that one. Jeff Rock. Dale. Jalen. What's happening? Carla. Big AZ. Good. Rick. The Blueberry. Cool Beans. Jay Rocco's in the house. Yard Bitch. Oh, man, what kind of a name is that? John Werner, how you doing? Jose, good evening, Jose. Que pasa? Parody. Join hasn't sent gifts in a while. Oh, okay. Weird thing to throw down there, I know. All right, so. Hello. All right, how are we doing over there? Good evening. Big Azen, good evening, sir. David, good evening. Chef Joshua, good evening. Denzel, what's happening, Denzel? All right, I think we're getting here. What's up, James? This is Into the Blue. What do you think of Comcast? I'm trying 1% weak covered call there. Well, let's take a look at Comcast. You're welcome. Thank you. Mike in Love, good evening. Feeling better just a little bit. I get a little bit of rumbly in the tumbly. So let's see if we work out for the night. All right, so Rob from Georgia wants to take a look at Comcast today. Before we take a look at Comcast, oh, wait a minute. I didn't start streaming yet. Because I think we got 4 or 5 channels on the streaming. All right. All righty, so let's get a rolling. First of all, before we go take a look at Comcast, let's take a look at IBM and what happened to IBM today. I got a couple questions about it. I did. So what do you do when you buy something and it drops real big? Now, I bought some IBM on Monday. Did I expect this to happen today? No, we're going to go into it in a second and explain what do you do when a stock that you like goes down. Well, because if you look at the chart for the year, look, it went up, it went down. It went up, it went down. It jumped up here, it dropped here. It jumped up here and it dropped here. Well, that's what stocks do. Stocks go up, stocks go down. Now, we never really know how much they're going to go up or down. We just know that they are going to go up and they are going to go down. All right, so let's take a look at IBM. Now, we all know who IBM is. Okay, they've been around for a while. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Up, down, up, down, up, down. Big down here. So what happened here? Now, like I said, I jumped in on Monday. Let me squeeze in and show you a little bit closer so you get an idea. Okay, so that's the 1-year chart. A year ago, we're at 184. Then we dropped down to the bottom of the year, which was in the beginning of August of last year. Right down there. That's the low of the year. And that was 181.81. Well, the high of the year was just a few weeks ago. Right there, as a matter of fact. 625. The high of the year right there. And that was 296.16. So look at this. Let me zoom into that a little bit closer so you can get a really good look at it. What is that right there? That's a big drop. Now, what happened? Well, apparently they didn't like the earnings, so the stock dropped. It is what it is, right? Motivational AM. What is AM, dude? You really got to explain to me what AM is. I have no idea. Your sign. I'm glad you feel something for it. Looks good. All right, thank you. All right, so anyway, I jumped in on Monday, which was the 21st. Because remember how I tell you I'm looking for a 30-day bottom, which was right here. That was what, the 16th? Last Wednesday. Thursday was higher. Friday was higher. And then Monday opened higher. That's my cue to jump in. So I jumped in at 285 on Monday. Well, look where we are now. We're at 260. Imagine that. $25 decrease just this morning. Okay, so from here to here, $25 decrease. We went from 285 down to 260. We even hit down into the 250 area today. Well, that's a big drop. So what am I going to do? Absolutely nothing. I bought it at 285. It's IBM. We all know who they are. I got well over 2% when I sold the 285s on Monday. Okay, so what's going to happen next week? Well, next week I want to see what she opens up at. Because anytime you have a big drop like this, like we had today, there's going to be what's called, now, excuse the terminology, it's not my name, it's just what it's called. It's called a dead cat bounce. When it drops, it bounces back up again. That's what they call it. I didn't come up with the name. It's called a dead cat bounce. It drops and then shoots back up again. So it went all the way down to the two. Let's find out exactly how low it went today. $252. So she drops all the way down to $252. Now I'm in at $285. How do you think I feel? Well, this is what I'm looking at. Next week, now I'm not going to sell the 285s next week. It just doesn't make sense. It's actually not even showing here. If I actually took a look at it, let's find out exactly what the 285 is going to look like. So the next week's 285 is only going for 21 cents a share. Well, that's horrible. But here's the thing. Now, I have no problem whatsoever selling the 267s or the 270s. I can still pick up a buck, which is 0.5%. And 0.5% every week is over 26% a year. Well, I'm kind of okay with that. But here's the thing. IBM's not going to stay down here that long. And, well, if you have the ability, okay, if you have the ability, you can dollar cost average. Okay, so I'm in at 285. Now it's at 260. I can meet somewhere in the middle, probably 272, if I buy the same amount. You know, close the gap a little bit. Okay, but eventually this gap is going to close. Eventually it is going to go back up. After all, it's IBM. It's been around for a long time. They ain't going anywhere. And they're big into quantum computing, which is big nowadays. Not that I don't follow the wave of interest. I don't. I just follow good quality companies that are consistently profitable. We got some couple questions here. Milo, how are you? All right, we're going to get to Comcast in a little bit, Rob. Oh, let me go back to some of these questions. What do we have here? All right, I'm stopping the questions for a second so that I can at least read some of them. Okay, I'm going to stop right about there. Do you work for ESPN? No, I don't. Where did you get that question from? You're welcome. Thank Big A's. Am I feeling better? I'm feeling just a little bit better. Remote worker. Good evening. M. Lacam. What's cassava? I have no idea. You got to give me the ticker symbol. I've never heard of cassava. I heard of it, but I don't know what the ticker symbol is off the top of my head. So let's keep on going. Carolina, good evening. Cool Stuff by Jake. All right, thank you, Cool Stuff by Jake. T. Myers. T. Myers. If he was a little man just learning stocks, but you don't want to lose a lot of money. I'm not quite sure what you mean by that because it's not really a question. My king, fully M. I have no idea what that means. Desubdigator. Okay, good evening. Cool Stuff by Jake, or is it more involved with talking to a person at a company? Okay, Cool Stuff by Jake, I'm not 100% sure what you're talking about because the two questions I'm looking, they don't seem to flow together. Or is it more involved with talking to a person at a company? Your sign, I'm glad you for something for it. Looks good. I'm not quite sure what that means. But, you know, it is what it is. Okay, chat. Hello. All right. So, Dean, subject. Oh, Dean, good evening. Mindy, dang, I'm late, missed IBM. No, we're actually just getting to IBM. So there's the big drop for IBM. Now, I get no problem whatsoever, strictly depending on what it's going to do tomorrow and then what it's going to do on Monday. See, I'm going to hold off on doing anything with my stocks on IBM until after the market opens on Monday, because I'll have a good idea of what's happening tomorrow. Because let's face it, it ain't got to go back up to 285. Because I sold somebody the rights to buy it from me at 285 this week. I picked up 2% on that, great. But 285 is way up here. Now, it could, but I seriously doubt it, is what it is, right? So she dropped. So next week, depending on what it does tomorrow and what it does on Monday morning, well, Monday morning, after the market opens, I'll see exactly which one of these makes the most sense. Because there's no way am I going to hold on to IBM without bringing in something. So whether it is $1.25 a share, doing the 167s, which is right about here, okay? Or if I do the 170s, the 270s, which is right here, or if I do the 275s right here. But I'm definitely selling something in this area right here so I can have some income coming in. Now, when you're retired, you're stuck on a fixed income. Now, I'm not old enough to get Social Security yet. Next year, okay? But this year, I got to figure out where my money's coming from. Where can I put it to get the biggest bang for my buck? Where am I going to be safe? Where am I going to have a consistent profit? These are important questions for me. So, that being said, let me introduce you. All right, let's wake up. All right, let me introduce myself. My name is James. This is Dividend Stock Talk. How it came about? Well, 15 or so years ago, my 9-year-old daughter jumped on my lap and said, "Daddy, what are you doing?" 9-year-old little girl. "Daddy, what are you doing? Can you teach me?" Now, out of all the things for a 9-year-old, no, it's like, "Daddy, can you buy me this? Daddy, can you get this? Daddy, can we go here? Daddy, can I have this?" No, "Daddy, can you teach me how to trade stocks?" Most adults don't get it. Most adults stay away from it. But here's a 9-year-old little girl who wants to learn how to do it. Okay? So with that being said, I'm going to share with you what I share with my 9-year-old daughter. Now, I didn't tell her very much that very same day because I had a lot of thinking to do. How do you teach a 9-year-old when most adults don't get it? Well, first of all, number one, it had to be simple. It had to be safe. The income had to be predictable, or her win rate had to be predictable. Okay? Consistent. I didn't want her losing. I wanted her to be consistently profitable, consistently winning, and then no way for her to lose. That fifth one always gets everybody. What do you mean no way to lose? Then you can't invest without no way to lose. Well, look at it from my point of view. My point of view is Coca-Cola has been making Coca-Cola for over 140 years. 140 years. I seriously think that Coca-Cola is going to be making Coca-Cola long after I'm gone. They've been doing it for over 100 years, so why wouldn't they continue? That's like General Electric. Oh, you know what? Let's just make baskets. No more electricity. No more appliances. Let's make weaving baskets. No, they're going to continue what they've been doing for the last 100 years. Okay? Hopefully, they're getting better at it. Well, here's a way to find out. Well, you have two options. Option number one is you can go and look at 10, 20, 30 years of corporate reports, annual reports, quarterly reports, whatever. Or go straight to the dividends, because a dividend is a portion of the company's profits they give back to the investors. Let me give you a brief history lesson. In the late 1590s, a bunch of businessmen got together and said, "Hey, we want to create the biggest company the world has ever seen." So they literally went door to door, knocking on doors saying, "Hey, have I, average person, could invest some of their money?" So this was the deal. You invest in our company, our venture. We promise to share the profits with you. In 1602, the first dividend stock was sold, the VOC, the Dutch East India Shipping Company. That company ran for 198 years. That's just shy of 200 years. They averaged 18% per year. Can you imagine that? 18% per year. Average 18% per year. 198 years. The only reason they folded was, guess, come on, you know it, greed and corruption. Yep, you give people power and money. Yeah, greed and corruption is going to take over. Just take a look at our government. Hey, greed and corruption. I probably shouldn't say that too loud. Anyway, besides the point. I have IBM. I bought it on Monday. I have no intention whatsoever. So, with those the 5 criteria: simple, safe, predictable, consistent, no way for her to lose. Okay. With those, I came up with 5 rules. They're simple, so simple. Get this. They are so simple, a 9-year-old can understand them perfectly. You ready? Here we go. Rule number 1: if it ain't on the list, don't even bother looking at it. Let me simplify it for you guys. If you don't like the stock, if you don't want to hold on to it, if you don't want to buy it, don't. For my daughter, it was, if it's not on the list, don't look at it. Just wasting your time. Well, the list consists of the top companies, because I only wanted to invest in companies that were consistently profitable. So if you got a pen, paper, this might be handy. So the list consisted of the Dividend Kings. 50 years, that's 5 decades of consistently increasing their dividends. Dividend Aristocrats, 25 years of consistently increasing their dividends. The Dividend Champions, it's going to sound similar, 25 years, but they're not as snobby as the Aristocrats. I mean, look at the name, Aristocrats, Champions. Yeah, so the Champions have 25 years worth of dividend increases, but some of the rules are a little bit less stringent. Okay. List number 4. The Dividend Contenders, 10 to 24 years of consistently increasing their profits. Then for the fun of it, I'm going to throw in Warren Buffett's list. Give it 5. I like 5. You're going to see a lot of 5s around. Anyway, besides the point. Why? Here's a serious question. Why would you invest your money into a company that is not consistently profitable? Now, I understand the new companies, they have tremendous growth potential. I understand that. I'm 61. That doesn't appeal to me much now as it used to. Okay, when I was in my 30s and 40s, yeah, potential was great, wonderful. Well, now that I don't have an income anymore and my investment has to pay my bills, well, I'm a little bit more picky on what ones I want. And those are companies that are consistently profitable for at least 2 decades. That's 20 years. Now, you might think that's a lot, or that's a very small amount. Well, here's the thing. The stock market's been around for 400 years. I don't think 20 years is a lot to ask. Because if you think about it, now we usually check once a week to see how many stocks, because every week they add more companies. Last week it was, this week it was 10,236, something like that. 10,236 different companies that we could invest in. So how do you choose which ones are right for you? Well, it's always going to come back to what is it that you want? Well, you know what I want. I want simple, safe, predictable, consistent 1% every single week. That's what I want. Now, 1% doesn't sound like a lot. It's not. It's very simple and very easy to get, especially when you're keeping your eye focused on what you want. Now, when IBM dropped, I didn't panic. Most people would. Well, I wouldn't, because I'm playing the long game. So I sold the 285s this week. Great. I got over 2%. Wonderful. So next week, I don't have to get so much. But next week, if I sell the 6750s, I'm picking up 125. Now, 125 is 0.5%. If 1% per week is 50% per year, okay, 0.5% per week is at least 25% per year. Well, I can deal very well with 25%. Not as much as 50%, but still. All right? Needless to say, I didn't panic. I'm just going to play it out and see what happens. Okay, we don't need to see all that stuff. All right, there we go. All right, so that being said, we're just going to keep our eye on IBM tomorrow and then Monday and see what happens. Because I have no intention whatsoever. Oh, I forgot to tell you the 5 rules. Let's back up for a second. So I told you the 5 criteria: simple, safe, predictable, consistent, no way to lose. I told you that. 5 rules. Rule number 1: if it's not on the list, don't buy it. Well, I just told you the list. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's the 5 list. That's number 1. If it's not on the list, no, don't even bother. Rule number 2: never sell at a loss. It defeats the whole purpose. We're not here to give money away. Never buy something you're not willing to hold on to the day you die. I get no problem holding on to IBM. None whatsoever. Rule number 3. Make sure the company is consistently profitable. That means year after year after year. The dividends go higher and higher and higher. Now, I normally do not invest into capital growth stocks because you can't tell when they're going to move. Now, the nice thing about dividend stocks is you have a good idea when they're going to move, because this is important. Stocks move for 2 reasons, and only 2. One is what's called an unknown reason. It means it either dropped or it jumped for a reason that we don't know. Or 2, a known reason, which we know why it moved. We knew something was coming. Okay? So let me explain the difference between the 2. An unknown reason. The Exxon Valdez crashed in the Northwest, spilled oil all over the place. Exxon stock dropped. British Petroleum, they sprung a leak in the Gulf. Their stock dropped. The train company derailed, spilled crap all over the place. The train stock dropped. Okay, stocks drop when something catastrophic happens that nobody plans for. What else? Hurricane, tornado, flood, blizzard, a natural earthquake, natural disaster. You don't know when they're going to pop up. Some say the CIA know when it's going to pop up, but the average person doesn't know. I like to get into those conspiracy theories every once in a while, because you know what really sucks about conspiracy theories? When some of them turn out to be true. You know, people say you're crazy, but it's actually true. That part sucks, because they lied to our faces, and we found out they were actually lying. And anyway, don't get me started. So, known reasons. A known reason, dividends. We know when they're coming up. They're on the calendar. As a matter of fact, here we go right here. Okay, calendar. This is called an EX dividend calendar. Okay, it shows you when every single stock is going to have a dividend. Well, you know what else it shows you? What else you can set your clock by? Earnings. Okay, the earnings are in the, what's that called? Blue and pink. And the dividends are in the green. So it's actually on a calendar. So what do? Well, you can do whatever you want, but this is what I do. I buy the stock just before the EX date. Well, you're probably asking, what's an EX date? Well, this is what's called an EX dividend calendar. It tells me when the stocks are going to pay a dividend, or they have the earnings, or anything that they can plan, that you can write on a calendar, that you can put in your Rolodex, your reminder. Say, hey, PP&G has their dividend coming up. Well, let's buy some. Because here's the thing about dividend stocks, especially the boring ones. You know, the ones that barely move. Those are the ones I like best, because they move predictably just before the EX date. Okay, so if Johnson & Johnson right here has its dividend August 26th, which is next month, if I want to collect that dividend, I have to buy that stock before that date. Okay, because there's 4 dates to remember anytime you're talking about dividend stocks. Number 1 is the announcement date. Hey everybody, this is James from Dividend Stock Talk. We had a great year. We made so much money. This is how you're going to get yours. It's the announcement date. That's when they tell the public, this is what we made. This is what you're going to get. The announcement date. Date number 2 is called the EX dividend date, represented by these little green dots. That is the last day the stock trades before the dividend is paid out, if you're looking for dividends. Now, dividend capturing is a great strategy. It's one of the oldest strategies there is. You buy the stock before the dividend date, capture the dividend, and then you sell it. Then you go grab another one. And you do the same thing. You buy it, get the dividend, and then you sell it. And you just keep moving on. Because every single week, every single day just about, there's a company paying out a dividend. As a matter of fact, let's take a look at this. Let's go this way and let's do that. There you go. See them all? Whole bunch here, whole bunch here. Now, it doesn't look like there's any here, but they couldn't fit them because there's 33 here, 25 there, 29 here, 47 there. Only one that day. Well, that's weird. There's only one there. Is what it is. Those are all the stocks that have dividends coming up. So if you want to do dividend capturing, hey, that's a great thing to have. And yeah, you can go right to Google, do a search, EX dividend calendar, and a whole bunch of them will pop up. This one is included in the trading platform that I use. Now, the trading platform I use is called Think or Swim, and it's offered through Charles Schwab, one of the biggest, brokers there are. But besides the point, if you knew, wait a minute, there's two more dates. Remember I told you there's 4 dates: announcement date, EX dividend date. Third date would be the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, well, that's the payment date. That's when you get your money. 4 dates: announcement date, EX dividend date, date of record, and payment date. Okay, so the nice thing about dividend stocks, they have a tendency to go up just before the dividend. So if you buy it just before the dividend and you collect that, so think about this. If you knew a stock was going to move at a certain time, what would you do with that information? Well, there are so many different trading strategies. Which one would you do? Now, most people say, I'd buy the stock. That's the stupidest thing to do. One of the stupidest things, in my humble opinion. Because a stock has to go up before you can make a profit. There is a trading strategy where the stock doesn't have to move and you can make a profit. Because stocks go in 3 different directions. Okay? Up, down, and then just nowhere. No, they call it sideways. I hate saying sideways because they don't go sideways. They go up and they go down. That's it. All right, so if they only go 3 different directions, and I got 2 of them covered, because if she stays the same, I'm getting a profit. If she goes up, I'm getting a profit. If it comes down a little bit, then it's a little bit different. Okay, but basically, if you can cover 2 of the 3 bases, well, that's a little bit more of an advantage now, isn't it? So now we got a couple advantages. Advantage number 1, we know when the stock is going to move based on the calendar. Advantage number 2, I know a trading strategy called the covered call, where the stock doesn't have to move at all in order for you to make a profit. If it goes up, I make the profit. If it stays the exact same, I still make a profit. Okay? But here's the thing. I don't ever buy a stock unless the chart is telling me it's the right time to buy. Okay, what is a chart going to do? Well, a chart's going to tell you where's the high of the year, where's the low of the year, and it gives you a rough idea of the ocean, the motion of the ocean, up, down, up, down, up, down. Check the waves. Looks like a little waves. The path through the woods, the flow of the river, whatever you want to call it, whatever analogy you want to call, whatever. It gives you patterns. Up, down, up, down, up, down, up, down, up, down. So where's it going next? Well, it's in an upward trend, slow. That's over the whole year. So if you take a look at the whole year, yeah, it's slowly going up. So what happened here? Minor glitch. Well, they also had a minor glitch there, a minor glitch there, and a minor glitch there. And what do they all have in common? Well, wait a second. Nope, there's a dividend there. Oh, announcement date. Announcement date. Or what do they call it? Earnings. Yeah, earnings, 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 earnings. I don't do earnings because I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. It just doesn't make any sense to me. But the dividend themselves, take a look. Dividends here, stock went up. 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 It's simple. Find as many, I'm thinking of a good word here. Find as many perks or as many things you can wait a minute, odds and probabilities. Find as many odds and probabilities you can stack in your favor. Well, number 1, only companies that are consistently profitable for over 20 years. Well, that's a good one. Number 2, a trading strategy where you make money and the stock doesn't have to move at all. Number 3, knowing when the stock is going to move by the calendar, because the calendar tells you exactly when they're paying their dividend. And if the stock goes up right around the dividend and you know it's going to go up, well, that's another little tidbit of information in your favor. So what we're going to do tonight is we're going to actually go through a few samples. I'm going to take a look at some stocks you guys like. I'm going to tell you I don't like that one, and I'm going to tell you why I don't like it. And if I like one, I'll tell you why I like it. And I'll tell you what I'm going to do. Now, I don't give advice. Well, I do give a little advice. The little advice I give is, it's generic. Like if you're worried about taxes, talk to a tax strategist. Not an accountant, not a bookkeeper, a tax strategist or tax planner. They'll help you avoid taxes legally. Okay, again, second thing I'll tell, never invest real money until you get paper trading under control and you get good at it. Okay? You will know. Once you start paper trading, it's like Monopoly. 4 greenhouses, 1 red hotel. 4 greenhouses, 1 red hotel. That's how you play the game. Well, the stock market, you buy it at the right time. Buy it low, sell it high. Buy it low, sell it high. Buy it low, sell it high. That's the way the game goes. Never once have I ever heard anyone say, hey, let's buy it high and wait for it to go higher. Yeah, no. I've never heard that. Nobody's ever said that to me. Now, a lot of you people in the audience say, hey, well, let's look at this company. It's at an all-time high. Why the hell would I be looking at it? Think about it. Does it make sense? If a company's at an all-time high, why the hell would you want to buy it? Unless you knew something that nobody else knew. Hey, it's supposed to go higher. I know this because whatever reason it is. Not because I think. No. I don't play that game. I'm 61. I don't have the luxury of being wrong. Okay, but however, I'm not saying I'm never wrong. I think I lost 4 times this year. Okay, now just let's put it in context. I got 7 accounts. I share 3 of them publicly. Okay, so you can see 3 of my accounts I share publicly. The other 4, too bad you ain't seen those. It is what it is. I got to draw the line somewhere, But here's the thing. 7 accounts, and I trade every single week. Every single one of my accounts has a dividend stock in it. And every single account, I trade an option against it every single week. So we are in, I believe it's week number 30 for the year. We're already halfway past the year. Okay, the year is already halfway past. We are in deep into the third. No, wait a minute. The first week. No, that ain't it either. What is this? The 4th week of the first month of the third quarter. Yeah, that's it. First week. No, sorry. 4th week, first month, third quarter. Also known as week 30, 31, somewhere in that area. But out of all that trading, I've only lost 4 times. Okay, you may think otherwise because my stocks go down. Yeah, they go down, but I don't sell at a loss. Now, here's the thing. When I say never sell at a loss, well, you're going to lose the most money hitting the wrong button. That's where you're going to lose most of your money first until you get the hang of it. Now, when I say, oh, shit. When I say never sell at a loss, what do I mean? Well, your stocks can go up and they can go down until you agree to sell it for less than you paid for it. Well, that's on you. Because IBM, yeah, it dropped down to 260, but the low of the year is at 181. Why do I care that it's at 260? It was at 181 last year. It's still higher. All depends on how you look at it. Now, we're going to go into a few more things as we progress through the evening. We are going to go through some live trades, so I'll actually show you exactly how I do them. And as we progress, ask questions you like. Okay, now, I'm going to apologize now because when I first started doing this, I only had 2 cameras going, which means I only had 2 channels. Well, now I'm up to 9. I got 9 different channels. I can't keep track of all the questions, and I want to apologize for that ahead of time. All right, so if I don't get to your question, I'm terribly sorry. I do this every night, except for Friday nights and except for Saturday nights. But last year, it was every single night. Every single night, 7 days a week. Now, 7 days a week, 365 days. I missed 6 last year. Okay, now, 1, I was sick as a dog, like last night. I was sick as a dog. So, I think it was like, anyway, so 1, I was sick as a dog. Second time, I had to take somebody to the emergency room. And we were there till like 4 o'clock in the morning. So that's kind of, self-explanatory. And then the other 4, well, we had the hurricane last year. Remember? Came right over St. Petersburg. No water, no electric, no internet, no nothing. For 4 days. So, there you go. I missed 6 days last year. And I did every single night of the year, except for 6. So what is that, 359? 358, something like that, 358 straight days. So anyway, let's go where we are. Let's got some of these to take a look at. That's IBM. I love when it drops like that. Let's go back to where are we? Right there and right there. Okay. Now, I love when finding a bottom like this, especially because here's the thing a lot of people don't know. Now, what happened here? Now, from my understanding, don't quote me on this because no, I'm a lazy trader. I did not do my research. Somebody told me. One of the people actually a couple of people in my trading group said it was something about the earnings. Okay, well, they didn't like the earnings. Well, why did it drop so much? Here's the thing. There's 5 numbers you got to remember when you're looking at stocks. One is the opening price of the day, the high of the day, the low of the day, the volume, and then the range. Okay, let me explain. See, there's 4 numbers when you're looking at a candlestick. Okay, you have the top of the wick is the high of the day, the bottom of the wick is the low of the day. On a red day, the top horizontal line, that's the opening price. The bottom horizontal line, that's the closing price. The distance between the wicks is the range. And the volume is just how many shares are traded that day. Okay, so those 5 numbers. Only one of them is controlled by one person, and that's the market maker. And the power that the market maker has is unbelievable. Take a look at what he did today. Okay, either late last night or first thing this morning, he gets an email, a text, something, and it has 5 simple words on it. We didn't hit our target. We didn't hit our target. Well, you didn't hit your target. Well, I'm going to drop it down a little bit. That's the power of the market maker. He gets one piece of paper, one email, one text. We didn't hit our target. And he gets to do whatever he wants with that information. What did he do with it? He dropped it 20 some odd points. 25 points was that? Something like that. So the other 4 numbers, that's you and I. Because we decide what's too high. We decide what's too low. And the volume, well, we decide if we want to buy it. We decide if we want to sell it. That's what we do. We create 4 numbers. But it's that one number that's created by the market maker. That's the opening price of the day. It is what it is. All right, so that being said, let's go on to the next one. That's IBM. I do have some IBM. Is what it is. All right, so questions. Are you using the same program to see the candles and see the stock value? Mr. Procaris, absolutely. Okay, Denzel, I'd like to say hello. More about person, company. Dang, I'm late. Missed IBM. No, you didn't. Dean, okay. Johnny Dill, business is best done in person with a handshake and eye contact. I always say to people, if you want me to play with your money, you want me to invest your money, you need to come to me, look me straight in the eyes, shake hands, break bread, all that kind of nice, neat, fun stuff. Yeah, DJ Speed, I do manage portfolios. How many different stocks do you hold at a time? Well, I told you I got 7 different accounts. Now, a lot of the same stocks are in all the different accounts because it just makes sense. But each account has anywhere between 5 and 8 different positions. Johnny Dill, new manufacturing facilities. Uh-oh. Anytime I touch the screen, they disappear. Right here. Johnny Dill, new manufacturing facilities will produce their own power to increase the power grid. That's not a question, Johnny, but thank you for that. Jojo, for tomorrow option, 8-1, AbbVie. 8-1, AbbVie. ABBV. Interesting. Now, anytime I look at a chart, I'm looking for 5 things. Now, I'm going to show them to you now. 5. I like the number 5. Ugh, stomach's still not agreeing with me. It was that stomach flu, okay? Like a lot of people are getting it, from what I understand. All right, so here we go. I'm looking for 5 things anytime I look at any chart. Now, to look at a chart should take you 3 to 4 seconds. Now, some of you probably thinking, no way. Well, let me show you. 3 to 4 seconds. You ready? High, low, is direction. Okay, that was what, 2 seconds? High, low, is direction. It's not at the high. It's not at the low. It's somewhere in the middle. Okay, right here, it doesn't look that bad because it looks like it's bouncing right there, going up. It doesn't take that long to initially look at it. Now, we are going to look at it a little bit deeper, but at first, high, low, where was it? Where is it? What direction is it going? All right, next, we want to look at the numbers. Now, when I explain, remember rule number 5? Make sure the numbers work. Oh, wait a minute, I didn't get to that one. Rule 1 was never buy something. Oh, yes, I forgot all 5 rules. Rule 1, never buy something not on the list. Rule 2, never sell at a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. No weekly options, no thank you. I'm looking for weekly cash flow. I can't get weekly cash flow from a company that doesn't have options, and I can't get it from a company that only has monthly options. Weekly options only, that's rule 4. And rule number 5, make sure the numbers work. This is where we're looking at the numbers, okay? Now, if I like the company, I'm going to take a look at the last price. It's right here, big, huge numbers. Oh, for those of you that are new here who didn't know, this screen right here is live on YouTube. To find it, just go to the bio somewhere, whichever screen you're on, because there's like 9 different platforms. So I don't know where they are with each platform, but each one has one. It's called a bio. Give you information about me and my company, whatever. But don't get old. It's no fun. I forgot where I was going. Oh, this is the last trade. This is live on YouTube, The 10MinuteTrader. Okay. 191.83. Now, a covered call is 2 separate things. You're buying a stock, you're selling an option. To make a complete covered call, you buy the stock, means you own it, then you can sell it to someone else using a covered call, buy right, whatever you want to call it. But it's one of the easiest, safest strategies there is. Because when you own the stock, well, it's yours. You have the control of it. Now, the one thing I like about options and I dislike about options, 80% of all options expire worthless. Well, I like that, and I also dislike it. Now, I like it because I sell options. So in that case, I'm on the 80% side. Every once in a while, I have to buy an option, so I'm on the 20% side. But I don't buy them that often, okay? And I don't buy them to get money. I buy them for other reasons, and we'll get into that a little bit later also. But here's the thing. At $190.83 per share, okay, I could sell the 190s. I can move this over so I can see it better. I can buy the 190s. Sell the 190s. If I buy it at 190.83, I can sell it at 190 and pick up $4.85. Well, you might be asking, why would you sell it for less? I'm selling it for less so that I can get $4.85. Because if you take the 190 sales price and you add the 485 price to it, now I'm getting 194.85. Well, remember, I bought it for 190.83. Well, now I'm selling it for 190 plus the 485. That's 194.85. Well, that's a lot more. But the stock doesn't have to move at all. It only has to stay above 190 by the end of Friday, the 1st of August. That's what it means. So let's figure it out and see if there's a good one. Because remember, the numbers work great. The numbers work great. So now we're going to take a look at the chart and see what that's actually telling us. Because every picture tells a story. Oh, this is not good. I might not be able to make it through. Oh, don't get sick. It's no fun at all. All right, a year ago, need the glasses for this one. A year ago, we're at 173.67. Now, we bottomed out in the middle of November, and that was 163.67. That's the bottom for the year. Now, the top of the year was 214.99. Well, from there, she had a big drop. Now, can you imagine this, buying it at 218 and a couple of weeks later having it be at 165? Well, this is where I tell you, don't panic. Never buy something you don't want to hold on to. Well, if you bought it here and it dropped here, well, number one, you shouldn't have bought it at the top. Okay, never buy at the top. Okay, number two, well, here's the bottom. And then she's going back up here. So let's zoom in to the last 30 days. Because the last 30 days gives me a good idea of where do I think it's going next. Because think about it. Today's Thursday, tomorrow's Friday. Options expire tomorrow for this week. See what it says right here? 25 July 25. Well, that's tomorrow. All those options expiring tomorrow. These ones right here, 1 August 25, that's next Friday. 8 August, that's 2 Fridays away. 15 August, that's 3 Fridays away, so on and so forth. Every Friday, one expires. So I keep rolling my orders and I keep selling covered calls every week to get a nice 1% every single week. Why not? It's there. It's there for the taking. All right, so AbbVie, we can clearly see 30 days ago, we're at 185. Okay, we drop down here. There's the bottom. It's at 182. Then she shoots up to close to 187. Then drops back down again. Here's a new bottom here. 2 days to the upside, and then the third day here. Well, this is where I should have jumped in this morning. But I didn't see this morning because today's Thursday. I usually don't buy stocks on Thursday. I usually do all my buying on Monday and Tuesday. Because if you look at it this way, if I'm doing weekly options, where am I going to get the most amount of value? Well, for a whole week. And that's Monday morning to Friday afternoon. Well, this just ended here. All right, let's try it one more time. My stomach is getting queasy, you guys. I might not be able to make it the whole night. Let's see what we can do. Alacran, what's going on, Alacran? Okay, go retire. Thank you. All right, so that being said, this is where I want to jump in. And like I said, let's do one at 190. So you can see what a covered call looks like on a good quality stock, AbbVie. Now, AbbVie is a dividend king, which means they've increased their dividends for more than 5 decades. So let's see what it looks like. Let's get rid of this. Let's change this to the covered call. And then I want to do the 190s, and that's right there. Okay, one contract at the market. Because I want this thing to fill first thing in the morning. Here's what it sounds like. Buy one covered call, AbbVie, 100. That's the weekly. 1 August 25 means this trade is going, this option is going to expire next Friday on the 1st. The 190 call option against the AbbVie stock at the market to open. I didn't stutter, didn't repeat myself. You're opening 2 orders. You're buying the stock to open 1 order, and then you're selling the option to open the second order. Okay, that being said, the maximum I'm going to make on this is $414. Well, to find out what my rate of return is going to be, I've got to take that profit and divide it by my investment. Okay, so let's do that. Let's get my calculator. 414. Okay, that's the maximum profit right there. See, maximum profit, $414.50 per contract. 1 contract, 414. 2 contracts times 2, 5 times 5. You know your simple math. Okay, so what is it costing me, and what is my rate of return? Okay, so the cost of the trade, including commissions and fees, $18,586. So let's divide it up. 18,586. Now that gives me a grand total of 2.2% for 1 week. Now, if 1% a week is 50% per year, come on, you know your math. 2% a week, well, that's over 100% per year. Can you imagine doubling your money every year? It's possible, depending on what you want to do. Take a look at what it is you want to do, what you have to work with, what trading strategy helps you get there quickest and the safest. Well, for me, it's the covered call. It's simple, it's safe, it's predictable. See, I know exactly what I'm going to make before I even do this trade. Okay, so I take that and I divide it by this and I figure out what is my rate of return. Well, on this particular trade, it's 2.2%. Well, I like 2.2%. So do I do it or do I not do it? So the big question is, you got like 5 questions. The big one is, does it make sense? The second one is, do I like AbbVie? All right, come on, that's a logical question. And then third is like, do I like AbbVie at this current price? That's another question, 190. And then fourth question, am I willing to buy this? Hold it until it hits my target. Well, what's my target? Well, my target is 190. Well, what's the stock at now? 190.83. It's already past my target. So if I buy it tomorrow, 190.83, I sell somebody the right to buy it from me at 190. I pick 480 whatever dollars it was per share. That's over $400 per contract. So here's the thing. Are you willing to hold on to it and continuously sell covered calls every single week until it hits your target? Because you got to keep in mind, even though it's 190.83 now, and it has 3 days to the upside after a 30-day top, remember the chart where it came down and it's bouncing back up again? Well, it could just turn right back around again. That's a chance you got to take. That's why I asked you the question. Do you like AbbVie? Do you like it at this price? Okay, even though, all right, let's go back to the chart. Okay. Here's your 30-day bottom. She jumps up because with 30-day top. You got your profit taken. Now we're back down to here. And we have 1, 2, 3 days to the upside. Now, can it keep going up? Well, normally it does, because up, down, up, down, up. It's in an upward trend at the moment. Could it stop and go down tomorrow? Yes, it could. That's the risk of playing this game. Never buy something you don't want to hold on to. That's rule number 1. All right, so let's see what else we got. Nope, not going to make it tonight. Motivational 1989 AM. What the heck is AM? AM. Well, now remember how I said rule number 4 was weekly options only? This is a monthly optionable stock. 15 August, 19 September, 19 December, 16 January, so on and so forth. Those are months of the year. So, motivational 1989, I don't do monthly options. Number 1, the numbers just don't work for me. And trying to guess where the stock is going to be in 30 days, yeah, that doesn't work for me either. 5 days is hard enough. You want me to figure out 30 days from today? Yeah, no, that ain't going to work. G. Jonetto, go retire. I'm already retired. I can't retire twice. Shop with Josh. How you doing, Josh? Okay, JK Life, great info. RT, thank you. Paula, good evening. Kyle, cool stuff by Jake. Jojo, stick to the stocks, James. No politics. Hey, I'm going to agree with you. Somebody brought it up. I forget who it was. Seabiscuit, but the price of the stock also drops by the dividend. Yes, it does. That's why I don't want to take the dividend. I want to get in 2 weeks before the dividend, grab my 1 or 2%, and then get out. Gen XJ, ULTY weekly dividends this week. Love it. All right, Gen XJ. Now, Gen XJ, you know why I don't like ULTY. They have not been around long enough. To get started, do you have to register online or do you have to talk to someone at a company? Well, to get started online, you just go open up a trading account with any trading platform you want. I mean, you have the mobile apps. There's Acorn, Webull, Robinhood. There's a few other ones. And then you have the other ones. You got Fidelity. You got E-Trade. Oh, crap. It's going to be a long night. Spencer, I've been selling put options and making 1% a week for the last couple of years on leveraged stocks. Nothing wrong with that at all, Spence. Nothing wrong at all. Jason, when you roll, do you want at least 1% of the original purchase price, or do you base it off the roll on? I like to base it on the original purchase price. I don't always get it, but I try to get as much as I can without putting too much risk on the table. McRicken, there's no resistance at a new high. Yeah, I get that. Man, bear, pig, do you diversify into a lot of different stocks at once? Absolutely. I made the mistake years ago, putting all my money into one, and I made that big mistake. User 2530073614353. I can't tell you that one. Okay, I have no idea who you are. I mean, you don't even have a real name. And it would be a disservice to try to tell you anything on what to do with your money, because I know nothing about you. TikTok taught me. Hope you're feeling better. Not 100%, but I'm getting there. When is Texas Instruments dividends last day to buy to get the dividend? D. Picardi. TXN. Well, it's not the month of June. There it is. Right there. The 31st of July is the dividend for Texas Instruments. And it is 136. So it's next week. It's $1.36. Uh-oh. Missed those. Mindy wants to take a look at UPS. UPS. The ups dudes. Oh, here we go. Ready? Here we go. High, low, is, up, down, up. Okay. Is what it is. It's at 102.53. So I gotta change that back. 102.53. So the 103s are going for 315. Do you realize 315 on a $102 stock is over 3% for 1 week? So what does the stock have to do? It's just going to stay above 103, or it's going to hit 103. All right, well, let's take a deeper look. Okay, a year ago, we're at 125.86. The high of the year was 145, and that was the end of October. Now, the bottom of the year was the first week of April, 90.44. But from 90.44, the bottom of the year, it's a nice upward trend. So we had a high pullback. Now she's going back up again. Sorry. Last 30 days. This is the last 30 days. Up, down, up. Well, the high is way up here, a little over 106. But today pulled back a little bit. Your 30-day bottom was last Wednesday, Thursday, Friday. Oh, crap. Tell you, getting old ain't any fun. All right, here's the bottom here. 1 day up, 2 day up, 3 day up, right there. That's when I should have jumped in on Tuesday. Wednesday, higher, and then Thursday, a little bit of a pullback. So what does that mean? It's a gamble at this point, because you have your bottom here, your 2 days up, here's the third day, and then yesterday and then today. Today was a pullback. So what's going to happen tomorrow? Do I want to jump in, take that risk? Or from the high here to the bottom here, and then 4 days up, is that enough to satisfy the people who took profits? Then you jump back in again. Because see, think about it. If you buy over here, you sell at the high, and then as she drops, you buy it again, and then she goes back up again. When do you get rid of it? It's very important. It's a valid question. John, when you said it had to stay above 150, doesn't that mean it's a put, not a call, selling 150? John, I appreciate the input. I really do. Okay. I don't discuss puts. The only thing I'm discussing here is covered calls. They're simple, they're easy, they're predictable, and they're consistent, and they're extremely safe. So yeah, when I taught my 9-year-old, this is the strategy I taught her. When you're talking about selling puts, it's a whole new ball game, a whole new set of rules. So I tell everyone, I give away one trading strategy. And the one trading strategy I give away for free. I'm not asking anyone to buy anything. We all know how the game works. You go in the bio, yeah, I got stuff to sell. I've written 14 books. I get that home study course. I get the paid morning trading group. I got all that crap. I'm not trying to sell you anything. I'm giving you information. How I taught my 9-year-old daughter to make 1% every single week. And I'm giving it to you for free. Now, if 50% per year is not enough for you, well, you're in the wrong place. Sorry. But I hope you can appreciate that. Begun to. Begun to. Interesting. NNE. What the heck is NNE? NNE. Nano-nuclear energy. Never heard of it. But here's the thing. Take a look at this. From April to where we are today. The low here is 18. Now we're up at 40. That's over 100% increase. But look what happened. She got up here, pulled back. Got up here, pulled back. Well, what's going on now? Well, here, pulled back. Now we're up 2 days from the bottom. Well, let's zoom in a little closer. Here's your last 30 days. Okay, 30 days ago, we were right here, just below 40. She dropped down, jumped up, dropped down again, and now she's going back up again. Well, what does that mean? Is that something you want to jump into? You have to decide, do I like this company? Am I willing to buy it and hold on to it? Well, me personally, I've never heard of it. So for me, it's going to be a no because I've never heard of it. Now we could. Oh, fuck. Damn it. Let's go to Yahoo Finance and see how well this company has increased its dividends over the last 20 years. NNE. Now, what we're doing, going to Yahoo Finance. Now, another little tidbit of advice I give people is if you're going to be investing, what the heck is that? I just got to prove that I'm human. Those silly little puzzles to prove that you're human. Okay, so Nano-Nuclear Energy Inc. One of the things, a little piece of advice I give people, if you're going to be investing, have at your fingertips a financial website where you can go and find out information that's not readily available on your trading platform. So the information I'm looking for is not on the trading platform. So I go to Yahoo Finance and I come over to historical data. Now, historical data is what you call the data chain. Every tidbit of information you want to know about the stock from the very first time it became public. All right, so let's take a look. Now, Nano-Nuclear Energy, I want to go to historical prices, dividends only, because I want to see if this company's consistently profitable. Now, do they have the ability to take a look at all the quarterly reports? Yeah, they do, but I don't want to read all that stuff. Well, here's what it's telling me. There are no dividends on this company. That's probably why I've never heard of them. Probably why I never heard of them. So if it doesn't have a dividend, well, how do I know when it's going to move? Because a dividend company pays out a dividend every quarter. There's 4 quarters in the year. January, February, March. First quarter. April, May, June. Second quarter. July, August, September. Third quarter. October, November, December. Fourth quarter. We're currently in the third quarter. More than half of the year has already gone. So I don't do companies that don't have dividends because then it requires me to do reading and research, and I don't want to do that. I'm a lazy trader, really, I am. Okay, for my 9-year-old, simple, safe, predictable, consistent. So why do I want to complicate it? Okay, if it worked good for her, I don't do anything else. Well, I do little things here and there, not much, but 90% of all my trading is exactly this because it's consistent and it's predictable. I'm trying to calm the savage beast within. Do I ever sell puts? Only once in a great while. Take care of yourself. Thank you, Cooney. Do you, as an investor, performances to work alone, or do you find it beneficial? Do you, as an investor, performances or work alone, or do you find it beneficial? Tyler, I'm not 100% sure what that means. Nettie, I would like to try the weekly options, but do you have a suggestion on a safe stock to try? Now, Nettie, unfortunately, this is the part where I say I don't give advice on stocks to pick. Jojo does. Jojo says Chevron. So let's take a look at Chevron and see if Jojo's right. Oh, crap. CVX. Chevron. Ooh, that's a tough one. I'm going to say no right off the top. Only because I don't like to buy at the high. Here's the 30 days. Up, down, up, down, up. So we're right here. 3 days at the top. Who do we got? Hello, hello. I hear someone.
Works so good for me. Makes my day. Religion has been the #1 selling brain soap nationwide for over 10 years. Sir Chantel, we've been making your post lunch.
Okay, EJ had some noise in the background.
You can taste over 7 years of our family commitment to high quality, real, natural cheese on every bite. You're up.
All right. Sorry, EJ had some noise in the background. If you guys have a question over on the Zoom call, just unmute yourself and ask. I'm going to let you know now, I'm not going to make it much longer. The demon inside is awakened and is not going to let me continue. All right, so let's see what else we can do. So Chevron, here we go. So I'm going to say no to Chevron because you have resistance right here. Somebody pointed that out earlier. It's the 30-day high, up, down, up, hits it once, hits it twice, hits it a third time. If it was worth more than 156, it would have went up to 156 the 3 times it tried. So I don't buy at the high. So Chevron, I'm going to say no. PWR. What the heck is PWR? PWR. Quanta Services. No. Again, why the hell would I buy anything at the high of the year? And it's a monthly. No and hell no. That's a no. Sorry, PWR is a no. Ellie, good evening. Rag, good evening. Nadeem. You ate something bad again. No, I think it was just a stomach flu. And it's still, the best way to lose weight is get the stomach flu. Because after the 4th time you throw up, the 5th, 6th, and 7th, there's nothing in there. Nothing left to come out. So your stomach tries to reach stuff into the intestines and starts pulling it all up, throw that up. And there's nothing left. Nothing left to throw up. So I've eaten like a sandwich in 2 days. That's it. That's the only thing I've eaten. A couple pieces of watermelon. Sandwich, a couple pieces of watermelon. And then some water with honey. That's it. Don't get sick. It sucks. Austin, how are you today? Black Dynamite wants to take a look at Dow. Now, Dow looked great beginning of the week also. So yeah, I did jump into some Dow also. Let's take a look. And Dow did the same thing. High, low, where was it? Where is it? Look at the motion. Sideways, down, sideways. Big drop right here. 25.07. Well, great. I bought it on Monday. Doesn't make me a happy camper. Let's take a look. Okay. Here's our 30-day high here. She dropped right there. And then that was last Wednesday. Thursday was higher. Friday was higher. And then Monday, she opened up higher than she closed on Friday. So that's my cue to jump in. So I jumped in on Monday. And then Tuesday kind of went nowhere. Wednesday, she jumped up. Tuesday, she jumped up. Wednesday, she gapped up and kept going, made a new 30-day high. And then today, big drop. Okay, big drop. Now, I have no intention in selling for less than I paid for it. What did I pay? Something like 28. Is that right? 28.50, something like that. And I sold the 28.50. I got 3% on Dow this week. So I have no intention on selling it. Oh, fuck. All right. So I bought it at 28. And most likely next week, I'm probably going to do the 26s or the 27s or the 26.50s. I'm going to bring in something. It might not be 1% next week, but I got 3% this week. So I'm kind of okay with it. And it's Dow. They've been around for over 100 years. Oh. Damn it. All right, let's take us to at least 10 o'clock. At least that way I can put an hour in. Hims has not been around for 20 years. It's going to be a no right off the bat. Jojo, Exxon. XOM. Jojo, you got a couple of good ones so far. Ooh, another good one, Jojo. High, low is, look at it, up, down, up, down, up, down, up. 110. The 110 is going for 230. That's 2%. And it always comes down to the exact same questions over and over again. Does it make sense? Do I like this company? Am I willing to hold on to it? Is a covered call strategy every single week something that I can do, something I want to do? Well, think about it. Even if you get 0.5% every week, you don't have to get a whole percent. 0.5% every week is 26% per year. Because simple rules, number one, never buy something not on the list. So make sure when you're making a list, make sure it's companies you have a desire to hold on to. Don't hold on to them forever. Buy them when they drop. Okay, when they go up, take the small profit. You eat an elephant one bite at a time. The journey of 1,000 miles starts with one single footstep. Okay? Don't try to, if you're looking to buy something and have it shooting up to the moon and be rich overnight, that ain't going to happen. Not here. I don't do that. I'm looking for safe, predictable, consistent, 1% per week. Boring is what I'm looking for. Because it's the same stocks over and over and over again. Doing the same things over and over and over again. When you get to my age and you're retired, everything changes. Your perspective on life changes. You wake up in the morning with aches and pains you didn't have in your 20s and 30s and 40s and 50s. They just show up out of nowhere. It's like, oh yeah, I remember where that one came from. It does. Anyway, ExxonMobil. Let's take a quick look at ExxonMobil. A year ago, 113. Now we topped off the year in the beginning of October at 126. Now the bottom was the first week of April. Okay, that's when we had that big pullback in April. 97.85. Okay, she shoots back up again. Okay, here's our 30-day high right here. Okay, 30-day high, your profit taken brings it down to here. Then some more escalation. Okay, it gets to a certain point. When you go from here, 107 to 116, that's $9. That's a $9 increase. A $9 increase. No, wait a minute. That's a $29. That's a $29 increase. That's over 18%. Yeah, that's going to be profit taken. There it is. Now you got 4 days to the upside. ExxonMobil, it looks wonderful. This is going to be the last one we're going to do that I'm calling it a night, and I'm going to go lay down before I yak again. Sorry. I know someone's out there, some sick, twisted guys out there say, serves you right. Look at him. The old man's getting sick. Yep, I am. All right, so we're looking at the 110s. They have a 111. Let's do the 111s. All right, let's do that. Let's go covered stock right there. The 111s right there. One contract. At the market, here we go. Buy one covered call, ExxonMobil 100, that's the weekly. 1 August 25. That means it's expiring next Friday. Okay. The 111 call option against the stock at the market to open. I'm making $178 for one contract. Well, what's it costing me? Get that calculator out again. 178 is the profit. I'm going to divide that by the investment. The investment, 10,922. 922. That's 1.62%. Well, it's more than 1%. If 1% is 50% or more per year, well, 1.6% has got to be at least 80%. Let's find out. Multiply that times 52 because there's 52 weeks in a year, and you can do this every single week if and only if the company you buy has weekly options available. And that's why I only invest in companies that have weekly options. At first, I stayed away from them because I didn't know. I didn't understand them. Well, they're not that difficult. If I'm buying it at 110.79 and I'm agreeing to sell it at 111, and to agree to sell it at 111, someone's going to pay me $178 per contract. Well, 111 is 21 cents more than I paid for it. Now, granted, that's not a huge profit, but I'm getting 21 cents here. If I buy it at 110.79 and I sell it at 111, well, that's 21 cents. Plus, I get to pick up another 178 per contract. That works for me. That makes sense. Now, I'm apologizing. I wasn't here last night because I was sick. Tonight, I've tried. I made an hour. Okay, I want to apologize. Now, tomorrow does start the weekend because I don't do Friday nights and I don't do Saturday nights. That being said, I'm going to get going and I go lay down before I throw up again. You guys have a great night. Terribly sorry, guys, but we'll see you tomorrow at 2:30. Oh, yuck. Don't get sick. It's no fun. And sorry, guys. Oh, come on. It doesn't want to turn off. There we go.